The bears had control. Now something is changing, and you need to see it before it plays out. Welcome back to Crypto Academy. In the last video, we broke down the bearish roadmap, 2 flags, a head and shoulder, and support zone down to the 52,000 zone. But right now, the 4-hour chart is quietly building a pattern that tells a very different short-term story. And the next move could be one of the most important setups of the entire market cycle. In the last video, the message was clear. Sellers were controlling every pump, bearish flags were forming on the daily, and the 71,500 neckline of the head and shoulders was the key level to watch, and the market respected that analysis perfectly.
Every pump is being sold, every recovery is being rejected. That is the market selling under pressure. Bitcoin has already formed 2 bearish flags to 71,500. Short-term support, head and shoulders neckline.
But here's the thing about the bear markets. They don't last forever, and they don't fall in a straight line. At some point, buyers fight back, and right now, at the 74,000 to 75,000 zone, buyers have stepped in, not weakly, not tentatively, but strongly. Their defense changes the short-term picture. The question is whether it changes the bigger one too. On the 4-hour chart, a potential inverse head and shoulder pattern is forming. Now this is the mirror image of the bearish head and shoulders we showed you in the last video. Instead of a top reversal, this is a bottom reversal pattern. And now when it forms after multiple drops at a defended support zone, and when it forms after multiple drops at a defended support zone, it is one of the most reliable bullish signals in the technical analysis. The market made multiple drops, and every single time buyer came back at the 74,000 to 75,000 zone. That is not random. This is a defended zone. The buyers are saying, not here, not today. Multiple tests of the same support without breaking it makes the support stronger, not weaker. The lower time frame momentum is looking bullish right now. The market is recovering step by step, level by level. Now here's how the reversal begins. Not with one explosive candle, but with quite stubble accumulation. For this inverse head and shoulder to confirm, Bitcoin needs to break and hold above the 78,500 to 79,000 zone. That is the neckline, that is the trigger, and it needs to happen with strong momentum and real volume. Not a weak wick, not a slow grind, a decisive breakout. If that breakout confirms, the pattern projects a move toward the 81,000 to 82,000 zone. The previous highs, the zone where the rally last failed. And this is where the story gets complicated. If the neckline breaks, strong momentum plus volume, 78,500 to 79,000 inverse and head and shoulder confirms, target 81,000 to 82,000 zone. If the neckline rejects, weak close below 78,500, pattern fails, bearish structure from the last video resumes. Here's where we need to zoom out, because what looks bullish on the 4 hours can be a trap on the daily time frame. And right now the chart is showing something very important. The 81,000 to 82,000 zone, the exact target of the inverse head and shoulder, is also where the daily chart is forming a potential double top or even a triple rejection zone. That is not coincidence. That is the market setting a trap. Think about what it means in plain language. The 4-hour pattern is building a bullish case to push the price upward to 81,000 to 82,000, but the daily chart is warning that once the price gets there, sellers may be waiting with everything they have. This is one of the oldest plays in the market's playbook, and it works every single time because most traders fall for it. Here's how exactly it could unfold. Step 1. BTC breaks above the 79,000 zone. The inverse head and shoulder confirmed. Breakout, piles buyer in. FOMO enters the market. Everyone gets excited. Step 2. The price pushes toward the 81,000 to 82,000 zone. Short sellers from the previous drop get liquidated. More fuel added to the pump. It feels unstoppable. Step 3. Price reaches the daily resistance zone. And this is where the sellers who have been waiting patiently step in aggressively. The very buyers who chased the breakout now trapped at the top. Step 4. Reversal begins and the breakout buyers become the next wave of forced sellers the way down. The market moved bullish, attracted buyers, liquidated the shorts, swept the liquidity, and then reversed. That sequence is not an accident. It is the script. Every major move in this market had a decision point. Right now that move has a name and a price. The decision zone is the 81,000 to 82,000 zone. Breakout continuation or major bearish reversal. If Bitcoin reaches this zone, watch for these 3 rejection signals. Weak candles with small bodies, buyer running out lot of energies at the resistance. Long upward wicks, price rejected repeatedly before closing lower. Bearish engulfing candle, sellers overpowering buyers in a single candle. Any one of these three signals at the 81,000 to 82,000 zone is not just a warning, it is a potential entry point for bigger correction. Don't chase the breakout blindly, watch the candles, watch the reaction, let the market prove itself before you commit. Now for the summary, a 4-hour pattern, inverse head and shoulder forming, the 74,000 to 75,000 zone holding, the neckline trigger of 78,500 to 79,000 zone, the bullish target of 81,000 to 82,000 zone, the daily warning a double top or triple rejection, the decision zone 81,000 to 82,000. Watch the candles. Short term, bullish as long as BTC holds above the support. Watch for the neckline breakout at 78,500 to 79,000 with volume. At the top, the 81,000 to 82,000 is not a celebration zone, it is a caution zone. Watch for rejection signals, don't chase, don't get trapped. In the last video, the bears were in control. This video, the bulls are fighting back. And the next few candles will tell us which side wins and whether this recovery is real or just the market setting a more expensive trap. Watch the volume at every key level. The chart is telling you the story. Your job is to read it, not rewrite it. If this breakdown helped you see both sides clearly, smash that like button and share it with the trader who sees only one side right now. See you in the next one. Peace.